Coin traders, what's going on? Going to be looking at Algorand today, talking about the recent move, the recent pullback, and pretty much what we're expecting from here. Now, I actually did end up moving my long-term no-touch hold position of Algorand onto the exchange and actually ended up trading this big overbought level and profiting from this nice pullback here. So, ended up touching my no-touch position, and we're going to kind of talk about some of the pullbacks and some of the targets and things like that in the show today. So yeah, this quarter I am actually no longer eligible for governance rewards, but I ended up doing better on the trade than I would have gotten for the 1.6% right now that we are targeting for this quarter in this period of a governance. So you are welcome to everyone still in. Do got a lot to talk about today, so if you are enjoying this type of content and the shows, make sure to hit that like button, and then also make sure to subscribe and hit the notification bell if you haven't done so just yet to stay updated. Okay, so first, let's go ahead and dive in and talk about this overall daily chart because we were actually looking at an inside bar break bearish that we saw on this recent bearish candle. So now getting a little bit more of that oversold bounce. And so one of the big targets that we were looking at, you can see if we look at this 26-period exponential moving average, let's go ahead and turn off the 12 and the 50. You can see very nice price support just on top of that. So on the move yesterday, we were looking at 2063. We actually bottomed out yesterday and closed at 2086. So a little bit of an air gap there, and especially now maintaining that air gap. But if we actually go ahead and flip into the 12-hour now too, you can see that we were holding this support above the, in this instance, it would be the 50-period EMA. So those were our two exponential moving averages to the downside for some of the longer-term trends. And if we zoom out a little bit more too, we can draw a couple different price levels for support based on the closes of this 12-hour. And let's actually flip over into the daily as well. Because one of the things we were eyeballing as support was pretty much going to be coming in right at the 21-cent level. And that's because if we look left, that was a big point of support before actually breaking below. And that's when we did smash the 20-cent level as well. So we had a big price level support there. We had a big price level support at the exponential moving average. And then actually, if we want to pull up a Fibonacci retracement, we do mark it from the bottom, which was 15.99. So if we run that up to the price high that we saw on this move, and if we look at the levels, we're actually looking at the 38.2% retracement. Has been a very nice target that we typically talk about on the show. Is being a very nice guide, especially when we look at continuing the upside trend. So price level for that was coming in at 2104. So if we do draw a price line there as well, and so if we do remove the Fibonacci, you can see how we're actually looking at a very big zone of support. And then so even flipping over into the 12-hour as well, another big key critical line on this 12-hour chart is coming right in at 20.51, which you can see was a big point of closing resistance as well as a big point of closing support. So we had big resistance point, finally broke it with this nice bullish candle, and then maintained it as closing support. So as you can see, we had a very big buffer zone of these overall supports right in this overall area from 21 cents down to about 20.5 cents. So typically we do find that when we look for downside targets in some of these longer charts, we actually have to also factor in some of the levels for the indications on some of the shorter trends. So for example, if we flip over into the 4-hour, you can see that once we actually did lose the 4-hour uptrend, we were looking at a pretty significant pullback and sell-off. And so if we pull up the RSI Relative Strength Index, you can see that at this point, that was pretty much when we were getting to that oversold level, although we didn't dip quite into oversold territory on the close. So at the close, we're looking at 30.43. So basically right at that level of oversold, which does mean that on the shorter time frames, we were looking at oversold indications. So on this 2-hour, for example, looking at a close of 23.8. So it was likely to assume that we were going to be finding support based on the indications that we were looking at, and then also some of the downside targeting supports that we were looking at as well. So that's what helps us create these very nice downside targets to look for new entries in. And so right now, you pretty much have to know that with the amount of retracement, we do need to have a little bit of an oversold bounce. And so that's kind of exactly what we're experiencing right now. And as you can see, we are getting stuck up now on these exponential moving averages, which now are resistance since they were so supportive on this uptrend. Now, that's not to say that we can't ultimately end up seeing some consolidation and strength from the bulls to blow back up, especially since we have seen the likes of Bitcoin and some other names doing a little bit better today and kind of reclaiming some of those gains that were given up yesterday. since Algorand was one of the names that did have one of the worst pullbacks yesterday. So now even flipping over to the 4-hour chart as well, you can see that we are starting to get stuck up at some of these exponential moving averages, specifically the 12 and the 50 right now. So we know that because we have a pretty tight zone between all three of these, it's going to actually be pretty resistive, but that's not to say we can't ultimately end up seeing a bull break from that pattern. Typically, though, this is the amount and size that we look at as being an oversold bounce and a bear flag, to then likely end up seeing that bear break and another trend back down to the upside, or to the downside, excuse me. And so that's one of the reasons why we do rely on Fibonacci extensions as well. So for example, from the high down to the low, you can see that we are getting stuck up below the 38.2, which is at 22 cents. That also aligns with these exponential moving averages, so we know that this is going to be a pretty resistive level and zone right at 22 cents. But like we said, if we do end up breaking through that and maintaining that as support, very good shot once that happens of seeing new price highs for this shorter term trend. Now, there has been an announcement earlier, and I did make a tweet about it as well, that we do have a potential speculation that Genesis, which is a cryptocurrency lender, and it is one of the ones that the exchange Gemini uses for their lending and earn program, for example, they have effectively halted withdrawals since about November when the FTX crash came in. And so there's major speculation that this upcoming week they will announce a bankruptcy. And so this could really have a bearish impact on the markets as well. Now, it's obviously not going to be as substantial, in my opinion, as what we saw for the big FTX flush for a lot of the crypto names. But nonetheless, that still will be another bad sign and another crypto institution adding that negativity and propelling that FUD fire a little bit more. So I would actually expect, although not necessarily that great, a little bit more of a bearish impact. And so essentially we could be looking at that as one of those black swan events like we were talking about to end up figuring that our shorter term lower high is going to be set. And so especially given how overbought things have been lately, we know that a sell-off is coming regardless. So that could ultimately propel the bears to end up seeing a lot more downside gains. Obviously, none of that is certainty though, and it's just a speculation. But personally, my belief is that it will have a bearish impact on the market if when it does happen. Not quite as much as FTX, but I think nonetheless, it still will be an event to look out for. So yeah, definitely make sure to go drop me a follow over on Twitter at @coin_trades is the handle over there. Stay updated on all types of announcements like this and discussions, and I'll see you over on Twitter. All right, so 6-hour chart now over on Algo. You can see the 12 and the 26 have had a bearish cross, and pretty much the middle of this line right now is 22 cents as well. So another confirmation that we are looking at 22 cents as being an extremely valid upside resistance point. But overall, off the bounce, let's actually pull up volume, and you can see that we are starting to get a little bit more increasing a bullish volume, and especially after we haven't had that much bearish volume coming in to continue a downside move. But that's not necessarily as significant because typically the bearish volume does start stepping in once we actually get up to these resistance points. And that's when a lot of the bears do start scouting those entries and giving the bulls a little bit of false hope in that instance. Okay, so I want to at this point actually flip over into the Algorand versus Ethereum pairing. And I know I don't really typically talk too much about Algo versus Bitcoin pairings or Ethereum pairings. So I did want to go ahead and make a look at it this time and just pretty much talk about this constant steady downtrend that we're looking in, especially in the log scale. You can see that it's definitely not the best looking chart at all. But nonetheless, we know that it still does form a longer term falling wedge. So if we do take the lows down to pretty much where we've seen every single test off of so far, and then if we do look at a resistance point as well, and obviously the EMAs are a guide, but let's specifically look at this resistance point to the downside. So we can see that we're looking at a very clear picture of a falling wedge. So if we actually extend this out for an apex target, then we can look at effectively around May of this year, which is when we've been talking a lot on the channel about a lot of decision happening for the rest of the crypto space. So I do think that this spring is going to be extremely important and critical. And even if we already have found bottoms for a lot of the crypto space, I think it'll probably just be pretty flatline and steady through the spring. And that's kind of when I expect to actually get a little bit more confirmation on whether or not the recession that we're having right now and all the global financial turmoils is going to have that much more of a negative impact, or whether or not we will start to see a lot of the bulls emerge from the shadows and see prices getting pushed back to the upside. Like most things though, timing is always one of the hardest parts in this space to nail. Technical targets we can see on the chart, but timing is always impossible to tell. But we do know that markets always do what they're supposed to, just never when they are supposed to do it. So that's why we will be keeping an eye on this chart. But overall, right now, we're still very much in a downtrend, and we are still following that longer-term falling wedge. But my suspicion is that if when we do break bullish from that wedge, we'll actually see a very nice rally and continuation in growth cycle start to emerge, and that'll be the emergence of a very new, strong trading cycle and life that we can actually get up to some of those higher market cap and price targets like we've been talking about for so long. So yeah, let me know your thoughts and feedback down in the comment sections. Also, feel free to roast me for leaving governance this quarter. If you do, please. And let me know your thoughts on that as well. But yeah, if you did enjoy the show today, please hit the thumbs up, like, and subscribe button if you haven't done so just yet. Thanks again for all the continued love and support. It does mean so much. Stay safe, take care, everyone, and I'll catch you back in the next video.